What if the billionaire age didn't just happen? What if it wasn't innovation, or capitalism, or luck? What if today's billionaire class, the tech titans, the hedge fund kings, the global real estate barons, emerged not from natural economic evolution, but from a 40-year-old political blueprint almost no one talks about, because buried beneath the slogans of freedom, growth, and free markets lies a coordinated economic revolution launched in the 1980s. A revolution so powerful that it reshaped global wealth, rewired national economies, and quietly transferred influence from governments to private capital permanently. You may think you know the story: Reagan, Thatcher, deregulation, markets going free. But the real question is this: why did policies from the 1980s create millionaires and then billionaires and now trillion-dollar companies? And why is wealth concentration today accelerating faster than ever before? Tonight, we're not retelling the old story. We're uncovering the hidden blueprint, the interconnected decisions that built today's billionaire empire. And once you see the origins, the modern world suddenly makes a lot more sense. To understand how the billionaire age was engineered, we must first go back to a time when it was almost impossible to become one: the 1950s, 60s, and 70s. Back then, the richest Americans paid 70 to 90% marginal tax rates. Corporations paid far higher taxes than today. Strict financial regulations kept banks and investment houses separated. Trade unions had massive power. Large-scale corporate mergers were often blocked, and global capital couldn't move freely across borders. This wasn't accidental. After the Great Depression and World War II, governments across the West designed economies to protect workers, keep speculation in check, and prevent extreme wealth concentration. It worked for a while. The middle class boomed. Inequality shrank, but something else was happening quietly in the background. The system was getting stressed. Inflation rising, industries stagnating, oil shocks hitting entire economies, governments struggling to manage debt and unemployment. By the late 1970s, people felt something was deeply broken, and into this moment of crisis stepped two leaders, one in the US, one in the UK, who promised not small fixes, but a new economic order: Ronald Reagan, Margaret Thatcher. Two people with one mission: reverse 40 years of controlled capitalism and unleash something entirely different. But here's the twist: most people don't realize this wasn't just ideology, this wasn't just policy, this was a strategic blueprint, and its consequences were far larger than anyone expected. The blueprint didn't start in 1980, it began decades earlier, among a group of economists, political thinkers, and business leaders who believed something radical. Governments are the biggest threat to a healthy economy. Markets should rule, regulation should shrink, taxes should fall, and wealth should flow to those who create it. This movement, sometimes called neoliberalism, didn't gain political power at first, but it found allies in business communities, financial interests, and emerging think tanks. They believed capital should be mobile, industries should be privatized, social protections should be rolled back, and taxes should be dramatically reduced. For years, these ideas spread quietly through academic papers, business conferences, and policy circles, waiting for a crisis big enough to open the door. 1. Tax revolution, the first pillar. Both leaders slashed taxes aggressively. Top income tax rates were cut dramatically. Capital gains taxes were reduced. Corporate taxes fell. Estate taxes were weakened, because higher taxes on wealth had prevented extreme accumulation. Effect: lower taxes opened the gates for wealth consolidation on a scale unseen in modern history. Suddenly, owning capital became more profitable than working. Investments skyrocketed, executive pay exploded, and generational wealth became easier to build and harder to lose. This alone began the billionaire boom, but it wasn't enough. 2. Deregulation, the second pillar. Entire industries were loosened or unleashed. Finance, telecom, airlines, energy, real estate, hedge funds, derivatives markets. Regulations that once limited risk-taking or mergers were eroded. Cause: restrictions previously kept markets stable and power balanced. Effect: deregulation led to corporate consolidation, financial innovation, and speculation. Leveraged buyouts, mega mergers, global expansion of banks, the birth of the modern financial industry. This was the moment the seeds of 2008 were planted. But still, one more pillar remained. 3. Privatization, the third pillar. Thatcher sold off state industries. Reagan outsourced government functions. Airlines, utilities, telecom, infrastructure, railways, postal services, even prisons and defense contracting all moved into private hands. Cause Public assets were meant to serve citizens. Effect, they became profit centers for private investors. And with privatization came something even more important, the merging of political power with financial power. Private capital wasn't just growing, it was taking over functions once seen as essential government roles. 4. Union weakening, the fourth pillar. Reagan fired striking air traffic controllers. Thatcher crushed the miners. Unions had been one of the main forces keeping wages rising with productivity. Once weakened, cause worker bargaining power collapsed. Effect, wages stagnated, corporate profits soared, executive pay separated from worker pay. Inequality accelerated, corporate power became unmatched. 5. Globalization, the fifth pillar. By the late 1980s and early 1990s, a new phase emerged. Free trade deals, global supply chains, offshoring, free movement of capital, cause capital barriers removed. Effect, companies could now produce cheaply overseas, sell globally, pay lower taxes through loopholes, shift profits internationally. The billionaire class became global, and their power stopped being limited by national borders. By the mid-1990s, the blueprint's effects were clear: inequality rising, middle class shrinking, housing prices climbing, financialization accelerating, corporations merging, wages flattening, debt exploding. But the real breaking point came after 2000. The financial system, supercharged by deregulation, entered its most aggressive phase. Dot-com bubble, housing bubble, derivatives explosion, subprime lending, high-frequency trading, unprecedented leverage. And in 2008, the system built by the blueprint finally cracked. But instead of reversing course, governments doubled down, banks were rescued, corporations were bailed out, interest rates were cut to near zero, quantitative easing flooded the world with money. Guess where most of it went? Not to wages, not to small businesses, not to average households. It went to asset markets, stocks, bonds, real estate, private equity, tech companies. The billionaire class, already rising, now skyrocketed. The hidden blueprint had become unstoppable. Today's billionaire empire isn't just about money. It reshaped every part of society. 1. Politics. Massive political donations shape regulations, taxation, trade, and corporate law. 2. Media. Private capital owns much of the information ecosystem. 3. Housing investment funds, buying homes, driving affordability crises worldwide. 4. Technology, tech monopolies, controlling communications, data, AI, cloud infrastructure. 5. Labor, gig work, replacing stable jobs, benefits shrinking, wages lagging behind profits. 6. Global supply chains, long, fragile systems dependent on cheap labor and low regulation. 7. Wealth concentration. The top 1% owns more wealth than the entire middle class in many countries. This is not a conspiracy, it's not a secret cabal. It's the logical outcome of the blueprint's incentives, repeated for 40 years. Politicians made promises: tax the rich, raise wages, regulate finance, break up monopolies, support workers. But here's the uncomfortable truth: global capital became stronger than national governments. What the blueprint did, perhaps unintentionally, was build a world where companies can move money anywhere, wealth can hide in tax havens, corporations can shop for the lowest regulations, politicians depend on corporate funding. Entire economies depend on stock markets not collapsing, even if leaders wanted to reverse the blueprint. The system itself resists change. Look around today. Tech monopolies, the world's biggest companies, have reached trillion-dollar valuations. Finance dominance, private equity, hedge funds, and asset managers have more influence than many governments. Billionaire growth rate. The number of billionaires has surged exponentially since 1987. Real estate crisis. Investment capital owns huge chunks of housing stock, AI, and data. The next wave of wealth concentration has already begun, owned by the same players who benefited from the original blueprint. The pattern repeats because the blueprint continues to operate under different names: innovation, policy, growth, strategy, competitiveness, deregulation, market flexibility, investment incentives. But the outcome is the same. The system makes it easier for capital to accumulate and harder for anyone not in the top to catch up. Takeaway 1: billionaire wealth wasn't accidental, it was engineered. A coordinated shift in policy, regulation, taxation, and ideology created the perfect environment for extreme wealth concentration. Takeaway 2: the blueprint is still operating today. AI, data monopolies, financialization, global capital flows, all follow the same incentives created 40 years ago. Takeaway 3: The world we live in was designed, and design can be changed, but not without understanding the blueprint first. We are entering a new era, the era of digital wealth, algorithmic decision-making, and AI-driven economies. If the old blueprint produced a billionaire age, the next blueprint may determine who controls everything in the decades ahead. The question is, will we repeat the same pattern or rewrite the script? If you found this breakdown eye-opening, and you want more deep dives into the hidden forces shaping money, power, and global economics, then hit like, subscribe, and share this video, because the more people understand how the system was built, the better chance we have at imagining something different.